How's it going, everyone? It's Sam. I want to give you an update on a pharma stock, a little biotech stock that I did one video on a while ago, actually about 5 months ago. And I actually bought more of it here today. I want to explain why I bought more of it. It has 42% upside on tip ranks, and it actually came out with some really good data today, some really good results. But the stock's actually down about 22%. So I want to explain why that is and what the expectation was, why it's gone down, because it might be good for other stocks too for you to know in the future. Now, of course, always do your own research. This stock that I'm talking about today is very high risk, very high reward. Now, with that, you can either put a lot of money in it and you get ultra high risk or ultra high reward, and you can also put a little bit of money and make it less risk, less reward, but that money is still at high risk, even if it's less. So what I'm doing is I have put some money into it, but it's still a very, very, very small portion of my portfolio. But if it goes up like I think it might be a good little swing trade. Now, right now it has fallen a little bit since I bought it, but I'm okay with holding on to it. So we're going to get into it. If you guys don't mind though, hitting the like button. Also, I have some very exciting news. I will be working with Tip Ranks here. They are building out their channel, hiring other YouTubers to help them once a week on certain videos. So I'm going to be working with them. I really like what they have here on their website. So I actually know some of the people that are running the YouTube channel. If you guys want, you can definitely check out Tip Ranks. Just Google Tip Ranks or search it in YouTube and you can find their channel. I'll be on there every week for different growth stocks. So definitely check that out if you're interested. Also, Webull has a new promotion. If you haven't signed up for them yet and deposited money, all you have to do is deposit $5 to get up to $2,300. You are guaranteed, I believe it's $15 or $20 or something like that. And then you have an upside up to $2,300. So if you haven't already checked that out, definitely check it out. It does help out the channel. Even if you don't really care about $20 or $2,000, it does help out the channel. So I appreciate that. And last thing, it is the beginning of the month. So Patreon, you get the full month of Patreon when you sign up. And there is a discount that I added on there recently. In case you want to check it out, you can check it out down below the video. So Citius Pharmaceuticals is the company we're looking at today. It sounds like some Greek myth or something like that. There has been one YouTuber that's covered it pretty well before, and that's the Walrus Street. I gave him a shout out a long time ago, and he's grown like crazy. They're an interesting company. Now, I talked about them when they were just $1.96, even though it was up 25% that day. I did end up buying a little bit below this number here, and I was actually up like 100% as of a couple days ago. Now, it has come down a little bit in price. So if we look at CTXR stock, they are down pretty significantly today, and we'll explain why. It's down 20%. If we look at the last 1 month, it actually had a great run all the way up to $4.23. You can see it has come up a lot too in the last 6 months since we started talking about it. So I talked about right in here, it just went crazy since then. Now, what do they do? Before we look at what happened today, here's a warning. If you are not comfortable with needles, look away for a second and just listen. They have this product called Minolock. So they give this in their presentation here. Central venous catheters, they show them kind of here. They have a big problem right now, and basically they show it here. There are 7 million CVCs used annually in the US alone, right? Central venous catheters, and up to 472,000 become infected, leading to serious life-threatening infections. Now, this has a mortality rate of 12 to 25%. So about 5%, a little bit more than 5%, 5 to 7% get infected, and then 12 to 25% of that cause mortality. So, there is a high problem. It's about, about 1% or so of the overall CVCs used lead to mortality, maybe a little bit less, but that's still a huge amount. These hospitals are penalized for reporting high infection rates, not to mention incurring attribution cost of $46,000 to $65,000 per episode. So imagine they go through 1 million of these a year, or let's say you have a hospital that goes through 10,000 of these. You might have one out of every 100 people die. So that's 100 people that cost 46 grand. So that's 5 million. So right there, this product, Minolock, helps kill this bacteria. So after using Minolock, it kind of comes off like this. Now, this was developed by them, and they have a worldwide license for Minolock. So they are in clinical trials right now. And this just came out recently. This is, according to Minolock Phase 3 study protocol, the DMC is responsible for conducting interim analysis when 40%, 50%, and 65% of the total number of anticipated events have been observed. So they're in Phase 3 trials. Their next analysis was just now. So this is a 65%, and it was just held. They will review and provide written recommendations to Citius within 5 business days. So that's what happened today. Citius Pharmaceuticals announces positive recommendation by Independent Data Monitoring Committee to continue the Minolock Phase 3 trial as planned. So this is what happened today. This came out. So positive trial. They had no modifications requested by the DMC and no safety concerns identified. So it's good news from the company. But why is the stock falling, right? Why would the stock fall if it's good news? Well, let's take a look at the run-up here, right? We had a massive run-up from 250 on June 9, up about 70% in a week and a half. Now, I believe the reason that's falling is because a lot of people thought that the DMC would halt trial. They would say, hey, it's good. And of course, like, this is not my field, but this is what I think happened. There are certain times when they actually stop a trial early. This makes sense, right? You can look through here. There are different reasons for this to happen. But if something's really beneficial and there aren't any risk factors, or there's more upside than risk for finishing it early or ending it, then they might just push it through. So this isn't necessarily always the case, but I think a lot of people were swing trading this, thinking, hey, DMC might actually halt trial and just say go right through and push it through. But instead, they're continuing the trial. Now, DMC has a list of criteria for why they would do this. And right now, they just said they're going to continue it. So a lot of swing traders sold off, saying, hey, this is going to take way too long. If you look at their timeline, this is a multi-year study. So they're thinking, okay, I need my capital out. I'm going to sell it. And that's why it's down a significant amount. That's why it probably has come down a little bit over the last couple of days. Some people are just trying to sell out, taking profits before this was released. And then today, we dropped from $3.48 down 20%. Now, I bought in the $3, right above $3. Previously, I had bought in the $1.80 range, I believe, $1.90 range. But keep in mind, this company is still moving towards positive things. If you look here, they have $104 million in cash. Now look at their price. They're about $380 million, so still a small company. But they have $100 million in cash. They have a lot of different things besides Minolock. So they actually have a lot of other things that they have in the works. You can look through their investor presentation. They have advanced 4 pipeline programs, including the Minolock Phase 3 superiority trial, despite challenges recruiting subjects due to the pandemic. So obviously a lot of things have been slowed down that have been in trials because everything was pushed through for the pandemic and COVID and stuff like that. So right now, they are still in a good position. The thing is, it's more of a long-term approach. A lot of people in pharmaceuticals and biotech don't really want to take the long-term approach. I have a small enough amount of my portfolio that I'm okay just holding on to it. I'm fine with it. I'm happy just to leave it in there and let them get through everything and then just take my profits at the end. Or maybe never take the profits. Who knows? I'll have to reevaluate that in the future. But that's where we're sitting right now. And this is, I think this is good for everyone that's looking at stocks and maybe new to stocks and wondering, because I know I used to do this a lot, like some good news comes out from the company, whether it's earnings or something else, and then the stock plummets. And that can definitely bewilder a lot of new investors. But oftentimes it's because the expectations were higher or they were different, or it went up very quickly and then the next day you might be like, why is it down 20%? because a lot of people sell off, right? Like yesterday, GHVI had great news of them working with Facebook, and the stock shot up 12%, 13%. Now it's down 5%. People are taking profits because maybe they invested and they are happy with the 13% return. Maybe they think it will come back down. There are all types of reasons for this, but good news doesn't always translate into a higher price long term. Now, thank you guys so much for watching. If you guys want, there is the link down below to Webull. In case you want to deposit $5 on their platform, you can get up to $2,300. I guarantee you there's no better offer to, what is that, 400x your money out there. So definitely check that out if you're interested. Also, there's the link down there to Patreon in case you want to sign up. Thank you again for watching, and I will see you in the next video. Let me know what you think about Citius Pharmaceuticals, CTXR, down below. Thanks.